Hey guys, my name is Alex and welcome to Road to Forex. Today, I am going to be going over the one massive lie that you are being told that is stopping you from making an income with your trading accounts. Now, this is true whether you trade crypto, or you trade Forex, or you scalp, or even you day trade. Because the advice that I am going to give you here today theoretically should make you more money in a shorter period of time and keep you a heck of a lot safer within the markets for years to come. So, first of all, let's start with the lie. Withdraw your earnings. So you start here at $10,000 and you make $1,000. Now, some people will say, hey, take out the deposit that you put in. It cost you $1,000, take the $1,000 out and you're at break even. Wrong. Some people say take 50% of your earnings out. Wrong. Some people even talk about taking 20, even 30% out. Wrong. Because what we are going to be going over here today is the power of compound interest. Einstein actually talks about this and he's got a very famous quote where he goes, compound interest is the eighth wonder of the world. He who understands it earns it and he who doesn't pays it. Basically meaning if you don't understand what compound interest is, you are going to be a massive loser. Because what we do as traders is use compound interest to our advantage. You make $1,000 on that $10,000 account. Great. Now what happens if you leave the vast majority of it in there, if not all of them, is that the next time you place a trade, because your account size is bigger and you're theoretically going to be risking 1% of your account size every time you trade, well, your 1% has just grown because you're no longer trading at 10,000, you're trading at 11,000, then 12, then 13. So your earnings keep on growing and growing and growing and growing as your account size grows. And that is what is going to make you your money over the longer period of time. You may have seen ads about insurance or retirement, for example. There's one that runs here in Australia. Two men hop into separate elevators. Now, as the elevators go up, one starts to go a whole heck of a lot faster and is going higher and higher and higher. That's what happens. One elevator stops at floor 5, the other at floor 2, and both men get out at the same time. That means they've retired basically at the same time, but one's earned more money. Now, what I'm going to be proposing to you is if you hop in here and you take advantage of compound interest, and you do not, well, here's what's going to happen. I'm not proposing that you're going to make any money. I'm proposing that you make none, even fall straight through the floor. Because another thing that you need to be doing is, at least before you think about taking any money out, is making a buffer in your account. The reason why you want to do this is to protect you from your losses. You are going to go through a losing streak, guys. It happens to everyone. Whether you've got your own live account or you've got a prop firm account, you need to have a buffer. For me, it's 7%. It's a good round number, and it's very hard for me with my strategy to lose and go into a drawdown. So what I do is when I start off, say again, it's $10,000 or $100,000. We'll just say that to make it easier. I would go up to $107,000 and make that my basis. Even though I might have started here, I'm putting this $107,000 line as my starting point. Because we do not know when the losers are going to come. Are you going to go through a 1 trade losing streak? A 5? A 6? I've gone through a 7 and I risk 1% each time. That's why I have a 7% buffer. Because this means that I don't start to go into drawdown. Now, drawdown is when you start to lose money. If you start off with 100 and you're at 99,000, then you're losing money. If you have a prop firm account of 10,000 and you're $9,000 down, you're $1,000 in drawdown. Now, that is a problem. So I am protecting myself from that protecting myself from these losses, because what happens if you go, amazing, I've won 2 or 3 trades in a row, take that out, and then the losing streak appears. Now you've actually gone all the way down into drawdown. You can't take money out because you're losing it, and if it is all your money, well, that sucks, because you have all of this here. You'll be clambering to get back to your break-even zone. If you know you're $500, $600, $700 or $1,000 down, your mind's going to play tricks on you. You are going to be psychologically affected by the loss. If you go up to a random person on the street and say, hey, I lost $1,000 last night, they're going to go, oh my word, $1,000? Now, if you say you lose 1%, that's a different story, because it's only 1% of your account. But still, $1,000, $100, $200 is still a lot of money. So you're going to be affected by that. So I basically make this buffer in my account where I go, I cannot take any money out if I'm sitting at my 7%. It's only there for after. And what I also do with this buffer is, because I'm 7% higher, what I can do from this point is use that power of compounding interest, because I'm already up $7,000, and I'll be making more and more and more money. What you want to be doing, guys, is keeping that in there for as long as humanly possible. You want to not touch your account for the longest possible time, because it is the compound interest that is going to make you money, and you live off the interest of that. Here it is, guys. If you make, let's say, $1,000 again, you make $1,000. And the next time you make 1%, we should say that. You make 1% off of your account. And the next time you make 1%, but you've made $1,000. But the next time you make $1,000 and $10, take the $10 out. Take the interest and keep the $1,000 in there. Okay, well now you're $2,000 up. And what's the difference there? Well, you do it again and you go, okay, the difference between the $1,000 that I made, the interest on top of that, what is it? It's $50, it's $60, whatever it is. But you understand what I'm saying. It's the interest that you're taking off of the top. Because each time that you make a percentage and you keep that in there, you'll still make $1,000, but the next time you make $1,010, take the 10 out. The next time you make $1,020, because your account is still going up, you're still reinvesting the majority of it. Take the interest out. That's what you want to be doing, and keeping the majority of it in there. That is how you make an income for your account. And eventually your account will grow to such a size that you can withdraw large portions of money, because you have used the power of compound interest to, well, fulfill your lifestyle, whatever you want to do. That's what I do, guys, and I have been trading for a very long period of time. I only take out my interest. I don't take out the majority of my earnings. And even if you didn't want to do that, guys, maybe only withdraw 5% of your overall profits from each trade and leave the vast majority in there. Because I promise you, in 2 to 3 years, you are going to be laughing. Anyway, that is it from me, guys. I hope you enjoyed it. If you want to know more, the link to my Patreon is in the description. 2 times videos a week, and it's highly educational. So if you actually want to get into Forex and learn how to trade, well, link to my Patreon is there. Otherwise, www.roadtoforex.com.